DNA channel. Money DNA is a financial fitness community where we bring everything about money and beyond money concepts in life to help you create healthy money habits and to be financially fit for good. It is important to understand that the advice is general in nature and does not take into account your personal objectives, financial needs, and overall well-being situation, and it may not be appropriate for you.
Hi everyone, it's Winnie here. Thank you for tuning into Money DNA. We'll be looking at the lending process step by step on the application and what to expect. Join me today is Vorleak Srey at Veer Finance Advisory Services. Vorleak has been in finance and banking industry for 16 years. And in 2021, Vorleak brought her experience and knowledge to start her own business, Veer Finance Advisory Services, which provides various finance solutions and small business planning and advisory services to her customers. Vorleak, welcome to Money DNA again.
Thanks, Winnie. It's always good to be back. It's been a while.
I know. Now it's 2022, which is really exciting. So V, I think that last year we touched on with the initial steps of get home loan ready. We have covered with 3 C's, which is the character, collateral, and capacity, and also what the lenders are looking at. So for those who haven't watched with all the episodes right now, you can also check out the videos here. Now, one of the things I found, even with my own experience as a banker and also as a consumer, I found out there is one particular thing that always confused me, which is the process. So I thought that today we can also touch on with these nitty-gritty things, the process itself. And I think that most people are going to be so beneficial from our conversation today to know about what has happened after you lodge the application and the time frame and so on. So can you just please guide us the whole process itself and what we are going to expect?
Yeah, so Winnie, I think there's going to be a lot of people out there that will share very similar opinions and views with yourself around about the process and how confusing it can be, because it can be really different for everybody depending on the type of application that you have.
Yep.
But I guess let's break it down and just generalize it. The process itself, the term is such a process. It can sound really scary and lengthy, but it doesn't have to be if you're prepared. So to simplify it, I guess I'll break it down into 7 different steps. First being conditional approval. Secondly, house hunting and making an offer on that house. Third, unconditional or formal approval. The 4th step is contract and sign up of your loan documents. The 5th and most exciting part of the process is the settlement stage. And then I always like to say review as well. So adding that extra step of reviewing everything.
Right. Sorry, V, I think that it's going to be 6 steps, but at the same time, when you are looking at these steps, all of a sudden, all the memory all fresh back. Every step of the process is so crucial. And I think that there are so many information that we can share with customers and also our audience, especially when we touch on with the conditional approval, unconditional approval, and also settlements. So why don't we just break it down into steps? So earlier you mentioned about step 1, which is conditional pre-approval. So what is it about?
Yes, you're right, Winnie. There are 6 steps there, not 7. So let's go back to step 1. So conditional pre-approval provides an estimate of how much you can borrow based on the information that you provide us. So understanding your borrowing capacity and then conducting a soft credit check, which is essentially going back to our previous episodes talking about character, making sure there are no adverse history reflected. And then if there is, the next step is, I guess, looking at your income, deposit, gathering all of that information, like your liabilities and all of that, taking your goals and strategies and why you're buying a house into consideration, and what you're wanting to achieve for the future. And then from here, I guess it's about matching the right lender to you that suits your personal needs based on all the information that's been provided. So applying for conditional approval or pre-approval is really important, as it's going to help you understand what you can afford and give you the confidence to make an offer when the right property does actually come along. Most real estate agents actually nowadays won't allow you to make an offer on a property without knowing that you've got pre-approval from the bank or engaged into a broker. And I guess to do this, you need to submit an application to relevant bank with all your supporting documents. This process, if you get all the paperwork back to us along with the information required, it can be completed fairly quickly. And it's saying that a conditional approval, if done right, and your broker or banker has done their due diligence, can be issued very much the same day. So the process itself includes, for the conditional approval, step one, that is assessment of asset versus liabilities, income and servicing ability, hence the requirement of pay slips, the initial deposit assessment or your equity required, and then credit checks on the borrowers itself.
That is such a thorough explanation for the step one. And at the same time, if I look back to my own experience, I think that we started to engage with each other with my own home loan a while ago. And then I think that the most important thing is everything all comes down with a thought. So you're starting to have this idea about maybe acquiring for a property, or maybe selling a property due to, the personal circumstances changed. So for me, it might be moving to the different states, especially when we are looking at COVID. It actually really changed the way that we live, that changed the way that we stay. And all of a sudden, people are starting to look at my lifestyle, whether the current situation is going to be right for me, or whether I need to move to the, I guess, the rural area, or maybe closer from home, things like that. And when we are looking at that, lots of people actually don't know whether I should start by searching for the right properties right away, or whether I need to know, if I will be able to even get along. So I guess that the very first thing that you just clarified for us is, before you even jump into searching for the right property, you actually need to know your own lending capacity and understand about your conditional approval. Am I right to say that?
That's exactly right, Winnie, because you might find that you've got a whole different idea of what you can borrow, and you're looking in a whole different market that is not suitable. So having that initial discussion with your broker or your banker about how much you can borrow is going to help you eliminate that process and find the right property that suits you faster. At the same time as well, I think the process triggers a lot of different questions around, what are your goals? What are your strategies? Why the property? What are your non-negotiables? Things like that. So I guess that will take us into step two, which is finding the right property and then signing that contract of sale, which can be really scary as well.
Well, it certainly is.
Yeah. And a lot of people that have never signed a contract for sale before can see, quite a scary process being locked into a contract with such a big purchase. But it is the fun part is house hunting itself. So depending what you're in the market for, how long you plan to live in the property, are you looking for something new, or are you a renovator and want, something with character that you can make your own? It really helps to understand your non-negotiables, like I said before, to help shortlist properties along with the price range that you're pre-approved for. In the current world that we live in, it's really important to provide at least 21 days finance and a minimum 14 days to settle post that finance position being issued. So around about 6 months ago, banks were so far behind that we were recommending finance dates when you are signing your contract of sale to be at least a minimum of 28 days, so 4 weeks essentially, to even 35 days for finance. And most of the time, generally, real estate agents are going to know what's going on in the industry. So they'll know what to expect. It's not going to come as a surprise for them.
Yeah, you touched on with a really important thing. I do recall that last year, while I was still in the bank, our process time is going to be a month or even 6 weeks. And I think that with this step, do check with your banker or the broker initially how long the process is going to take. Otherwise, you are not going to just sign a contract, which is a really exciting part, just like V just mentioned, and then at the end of the day, not being able to meet with the condition itself. So we just touch on with a very important thing that with the finance, there will be a time frame. At the moment, it's 14 days. Sorry, at the moment is about 21 days. And then after that is going to be somewhere around 14 days to settle. So before you get into any of contract, please contact your banker and the broker to confirm about the process. Now, what about the third step then?
So the third step being the unconditional approval part, which is normally the best call to make to clients or emails to real estates and everybody involved in the transaction, because by then it's locked and loaded. So once you sign a contract to purchase a property, you would submit the contract to the bank or your broker where conditional approval was initially provided. And then along with any expired documents, so let's say, for example, you had your pre-approval 3 months ago, your pay slips that you provided back then would have been expired. By that time, you'd have to reissue new documents for the conditional approval.
Yep.
The bank will then conduct a valuation on the property, verify your income to make sure there's been no changes, look at all the new documents that's been supported or submitted back in, and once more issue what they call a formal approval. This is normally, like I said, a 14 or 30-day process, depending on the application itself. So simple application with no lender's mortgage insurance, fairly quick. When there's LMI involved, there's an extra step applicable as to different checking points by the bank and their credit team. Then during this time, so the conveyancer and settlement agent is essentially engaged. And your conveyancer, who represents yourself, works with the broker or your banker as your relationship manager, essentially, and ensures a smooth process by submitting all the relevant documents, including the transfer of land, stamp duty documents. All that stuff is done correctly, so then everybody's ready to settle.
Good. And also, I think that one of the important thing is, because you said by the time when we are going to get into the unconditional, we still need to double check on all the documents is going to be valid. And I do notice that, especially through the COVID, like earlier we mentioned, lots of people decided to change their lifestyle. Lots of people even changed their jobs. There was a big wave of the resignation. So if you do consider about changing your circumstances, please let your banker and broker know, because you don't really want to go through the hiccup through the time when you are going through this process and then have to do it again. So yeah, having that constant communication with your banker and brokers, I can't really stress the importance of that.
Very good call out, Winnie. Very good call out.
So what about the next step, which is the signing loan documents?
So step 4, so once conditional approval has been issued, that's when loan contracts from the bank is then sent out, and it's fairly quick. So most of the lenders nowadays use electronic signing. There's only a few that now manually has to sign loan contracts. So this is the part where I say this is your 30-year marriage to the bank, and hopefully there is a divorce or separation prior, because you'll be signing your mortgage document itself. So, I mean, I don't know if you know, but the word mortgage originally came from a French, or previously, that of Latin meaning dead pledge. So mort equals dead, and then gage equals pledge. So pretty much like grabbing you by the throat.
Kind of scary things to think of if you think about that way.
So going back to the process within your loan contracts, it should set out clear approval conditions, such as cards that need to be closed off as part of the approval, credit cards, for example, prior to settlement. It may stipulate on the contract that you would need a certificate of currency, things like that, before we can settle. So as a borrower, it's really important that you do read the contract and understand it, and ensure that the structure of the loan that you've spoken to your broker about is exactly the same as listed on the contract as what you agreed to. So whether it be fixed, variable, the interest rate, the repayment structure, things like that.
Also, I remember when we are going through my own home loan, they explained to me because every banks are going to structure their own repayment in a different way. Some of the repayments are being charged at the end of the month. Some of the repayments are going to charge on the date that you sign the contract. So everyone is going to be quite different. The best way for you to do is go through the contract with your banker and broker to understand about all the details, because this is, like V said, it is your debt bleach. So you need to make sure about all the nitty gritties that you're signed up for. But at the same time, those details about when you are going to be direct the debit for your repayments are going to also impact on your cash flow. So these are going to be some important information that you also need to double check with your bankers. Yeah. So what's going to be the next step then?
So next step is, I guess it's, marrying the bank and settling. So marry and settle. So from unconditional to settlement, generally the bank will require around about a 14-day or 2-week process minimum to get their documents ready. So during this process, they check that all the loan contracts, security documents such as the mortgage is signed and dated correctly. It is then signed off as what they would call ready to settle or securities in order. The file is then sent to their settlements team. Settlement is a transfer of the property from the seller to you as the purchaser. The settlement agent or your conveyancer as such, the bank and the broker will facilitate the settlement. These days, it's mainly generally via what they call PEXA, which is electronic only, and rarely now we see a paper settlement occur. So during this process, yourself as the borrower would generally not need to be involved unless there is requirement for shortfall funds or something's come up where they've had to call to confirm something in order to confirm settlement to go through.
And I think that especially when V mentioned about PEXA, most of things are going to be electronically at the moment. That's why the banks or the banker brokers are going to ask you some details as where do you want to have the proceeds go to? So what bank accounts, what type of accounts you are going to pass your proceeds or the money to. One of the things I do find out is because through the settlement, there are so many people involved, and most of the banks or the financial institutes have their own settlement team. So the best person for you to talk to is, of course, your banker. But at the end of the day, the settlement team are going to be the one to engage with the settlement itself. So I would say that if you know when you are going to settle, please contact your banker, and then just to double check on the time and if there's any things may arise during the time before the settlement itself. Yeah. So what about the final step? So now we already have all the documents settled, and then at the same time we also have our own dream home. What's going to be the next then?
Yeah, so you've found the right property, you've matched yourself up with the right lender, you've married the lender, and you've settled. So I guess step 6, the last and final step, is to review and adjust. And when I say settle, I don't mean, settle for second best. It's like having a partner, right? You've got to ensure that lender and that structure that you've got is still meeting your needs. So essentially, I'd like to, contact my clients post-settlement every 3 to 6 months, depending on the conversation we've had, just to review everything and ensure that their bank accounts are working correctly, the repayments are working as per their cash flow and budgets, going back to what you were saying. And, if they are on a variable interest rate, how has the market changed? Has anything changed for them now that may raise concerns for us to look at some peace of mind and security by locking in the interest rates, and what does it look like?
Yeah, and I think that you touch on with a very important thing as a cash flow, because a lot of people are going to connect their main account with the loan repayment, and some of the families do also divide their accounts into different things. So one account is going to deal with most of the repayments for credit cards or even a loan repayment. There are going to be another account for the day-to-day living expenses. So any changes may happen through the time. And also next Tuesday, we're going to have another announcement from Reserve Bank for the new interest rate. all the things may impact on your cash flow as well. So I think that one of the things important is, again, communication. So make sure that you understand about what you need, and at the same time also have a constant communication with your banker. But at the same time, not bombard with a lot of questions, because those are the questions that you need to understand through the way. So I guess that if I'm going to summarize all the process itself is going to be quite complex and also confusing sometimes. But if you are going to break it down into the steps, we are going to just simply look into these 6 steps. The most important thing that you are going to look at is make sure that you are going to find a trustworthy person that you are going to walk through the process with. So someone like V, understand about the whole process of the lending, are going to be a perfect person for you to discuss about your needs and also what is going to be suitable for your scenario. And then another thing is, of course, make sure that all the documents are going to be accurate and also on the go. And then through the time, make sure that it's going to be a constant communication so that you are not going to go through unexpected hiccup. So that probably is going to be a summary for me to go through this process. What will be the final note for you to share, V?
Yeah, thanks, Winnie, for calling that out. So I have to echo your call out in the sense that it is really important to work with somebody that you do trust and gel with. And that's just not, just your broker or your banker, but also your conveyancer as well. So your trusted tribe around you that's going to get you through the transaction. And essentially you can't, choose your real estate agent, but fingers crossed, most of them are doing the right thing and being responsive and ensuring that they've got not only their client as in the seller, but your best interest at heart as well, that if there are any delays and extensions are required, that they accommodate to things like that and they're communicating with your broker and your conveyancer at the same time. So I can't stress enough how important that is. And I do like to say to my clients who ask me once I have signed a contract, do you know any conveyancers that you recommend? And I like to give them at least a list of 3.
Yep.
And just say, look, call them, have a chat, see how you get along with them, because it can be a stressful process if something does come up in the contract and you need to renegotiate, that you're able to feel comfortable to speak to that person and not feel like you're humbugging them all the time, and that you're able to be open and voice your concerns throughout the process.
Definitely. And I also think that one of the things you touch on with is to have someone who is not only professional and also empathetic about your own process, but at the same time, do you take your own customers' need at heart? So customers' best interest first is always going to be someone that when you are going to deal with any of the professional, any of the expertise, these are going to be the key principle that you need to touch on with. Now, since we're talking about this subject, I think that it would be great for us to carry on with this next time when we are going to work on and also discuss about the difference with the banker and the brokers.
Yes, good lead in. Yes.
Yeah. And I think that we are not saying that which one is going to be the best. The most important thing is who do you trust, and then how are you going to find a trustworthy person? So do check out with this episode, but at the same time, if you like what we share and think that someone may benefit from this content, please like and share and subscribe this channel. And if you like to book into a complimentary consultation about your money DNA, or you would like to talk about your lending needs, you can also contact with V, and the V's contact detail will be captured down below. Also, if you have any questions or would like to hear anything from us, you can also leave the questions and also feedback at the comment section below, and we'll come back to you as soon as possible. Thank you for joining us today, and please keep financially fit and healthy. We'll see you next time. Bye.
Thank you, everyone.
Bye.